Good morning to you.
Good morning.
Now, what about this? I mean, we've seen palm oil and wheat not doing so well at the moment, but you still think clearly that this is a good investment, a good place for your money.
It has to be looked at from a long-term perspective. You know, it has been frustrating because last year indeed was a story of energy and hard commodities. And soft commodities, the main staples, corn, soy, wheat, they were really lagging the market. But looking back over time, these commodities are still at 100-year lows in real terms.
Right.
And looking forward, the FAO, the UN, they say that we need to double food production until 2050, when the world population will be 9 billion people. So on the back of very low stocks-to-use ratios, that means the inventory levels today are very, very low. They're at 40-year lows or just off of 40-year lows. We have an extremely positive configuration fundamentally going forward.
But 18 months ago, we had a kind of a food crisis. Now we seem to have overproduction. It does seem to fluctuate quite quickly.
Oh, absolutely it does. That's the problem with agricultural commodities. They're very influenced by weather. There's a lot of speculation, but I think investors have to look at this long-term picture because fundamentally, in my view, across the commodity space, perhaps with the exception of gold, this is perhaps the most compelling fundamental supply and demand situation we've seen in some time.
Now, you focus more on the small caps and emerging markets. Why is that?
Well, what we have today is we have a sector, as I mentioned, the commodity prices are at near 100, the soft commodity prices near 100-year lows. That means that the sector is extremely underinvested. Right. So if you were to ask an investor 5-10 years ago to invest in agriculture, that's like talking about nuclear waste. I mean, nobody wanted to talk about agriculture. Today that's changed in the last 2 or 3 years. And if you look at the most commonly let's say, cited index for the agricultural sector. That's the MOO index. It's only worth less than $400 billion today. That's the value of ExxonMobil. So given the importance of this sector globally and strategically, you know, there's going to be a lot of growth in that sector.
Coast, why has it been so underinvested?
Well, it's an uneven playing field globally in terms of pricing of agricultural commodities, in terms of subsidies, and it was never really a very investable sector, with the exception of some input companies like Monsanto or Syngenta or equipment like John Deere. But what we have now is the actual farming sector itself, which is gathering steam, which is gathering interest. We have a kind of global trend in certain emerging markets of modern, let's say, modern institutional-sized farming in places like Ukraine or Brazil, where you can invest in farming companies. And many of those companies are still private and they're coming to market. And that's why the small and mid-caps are so interesting today.
Have you got any individual stock picks for us?
Absolutely. I'll be talking my book. But you know, we have in our portfolio companies like MHP in Ukraine. That's Mironovsky Chleboprodukt. It's a company which produces chickens, actually, but it's a vertically integrated company, harvesting on some 200,000 hectares, and at the end of the day, producing chicken, well, for the Ukrainian market. Another one is perhaps Chaoda, modern agriculture, which is in China, quoted on the Hong Kong market. And that's China's leading, let's say, vegetable producer. And nonetheless, this company still has less than 1% of the market. So it's an incredibly fragmented market, and there's a lot of growth there, very high margins for Chaoda.
Interesting. Coast, thank you very much indeed for coming in and talking to us this morning.